Once again, guys, this is Investors Channel. As always, this is your host, Prince Dykes. So as always, don't forget to hit the like button, subscribe button, comment button, and share. And I don't have a lot of time. I definitely know you guys don't have a lot of time, so we're going to get straight into it. Today, what I did was I went out and I reached out to the industry and found a financial expert by the name of Ms. Tarra Jackson. Ms. Tarra Jackson has an extensive history in finances, going back to being a vice president at a credit union here in Atlanta, to being an author of her book, Financial Fornication, which is on Amazon and MissMadam.com. She has done she's also a life insurance agent. She was a life insurance agent for New York Life. Now she has her own company, which is called Prosperity Now. And she's here today to tell us about annuities. Ms. Tarra Jackson, thanks for coming.
Thank you for having me.
Thank you. So annuities, we have a lot of people that's out here, right, that are talking about annuities and things like that. But how can a new person, what is an annuity? What is this thing?
Yeah, a lot of people get very intimidated because of the word annuity because they don't understand what it is. But if you think of annuity as annual, annuity just comes from the core word annus, which means annually or yearly. So it just means that you're going to get a yearly income for the rest of your life, or you can get a lump sum of money, but it's to sustain your income for the rest of your life. For example, if you hit the lottery and they say, do you want your money all at one time or do you want it for the rest of your life? And you say, I want an income for the rest of my life. They're going to purchase an annuity. An annuity is going to guarantee you income on an annual, monthly, quarterly basis for the rest of your life. Think about Social Security. You pay into Social Security for a certain period of time. At some point in your life, between 62 and 67 or 70, they then give you an income for the rest of your life. So it's a federal annuity. So when you're thinking about complementing your retirement plan and you want to firm up an income for the rest of your life, or you want a lump sum of money or whatever, or for a specific period of time, you can invest in an annuity. And that will complement your pension, your Social Security, your 401k plan. It's just another stream of income that is guaranteed for you for a specific period of time or for the rest of your life.
Okay, so that's the part I like about annuities, that you can get paid for the rest of your life, right? And the idea is, it's about cash flow more than just a large sum of money in a lot of cases, because you can't outlive your money. You can't, do too much and live too fast or whatever. But how much money would you say one would need to start an annuity? Is that something you should consider maybe later on in life, or is it good maybe to try to maybe get into something
like that? An annuity is a great way to complement when you're about to retire. So in your 50s, you want to complement that, and you want to bridge a gap. Either I don't want to take my income for Social Security at 62. I want to wait until I'm 67 because I'll get more Social Security, but I still need income to bridge me through that. You can purchase an annuity that will pay you for a specific period of time, or you may say, you know what, I want this amount of money for the rest of my life, or I want to be paid for the rest of my life. And then based on that, you can determine how much the annuity is going to purchase. Because really an annuity is an insurance product. You're purchasing a lifetime stream of income, or you're purchasing income for a specific period of time. And based on what your needs are and your desires are, will tell you what the costs are. There are pros and cons to annuities, but it's something to complement you. So I wouldn't say put all your money into an annuity to get a lifetime stream of income. No, this is to complement all the other investments that you do and that you have within that. And again, it's to guarantee that you don't outlive your money. So if you put it in a 401k and then you draw from that 401k when you retire, at some point you're going to not have any money because you're drawing from that money. The annuity actually keeps it so that you have a lifetime stream of income until you're no longer here.
Wow, that's a very interesting, that you can't outlive your money. So the concept, right? Let's say if I have $10,000 or $1,000, whatever the case. So I give this to an insurance company, right? How are they going to pay me for the rest of my life?
Well, it's based on how much you put in there. So if you put in, say, $10,000, you're probably only going to get a couple $100. So it's relative to the amount of investments. So there are some people that choose to invest in the annuity over time. So they have about 20 years till they retire. They want to put $200 a month into an annuity so they can build it up. And at that point, they can either do a lump sum payout, or they can do a certain period of time. I want my annuity to pay me for 10 years, or they can say, I want my annuity to pay me for the rest of my life. Depending on how much is invested in the annuity will determine how much you're going to get per year, per quarter, per month. that way.
Okay. So it's a great way. So it is an investment instrument as well that you can pay into it, that you could and not get not lose money for the rest of your life. Not run out of money for the rest of your life, because last thing you want to happen is a longevity risk where you outlive your money. Where some people, you're 75 years old, that's not something you want to hear.
Exactly. And like I said, there are pros and cons to it. So I wouldn't recommend that it's the only investment, because there are some fees associated with it. Just like if you invest in certain things, there may be some loaded fees or whatever. So there are some fees to it because it's guaranteeing you a stream of income. So there are some fees tied to it. The advantages are there's tax strategies to this. So just like 401ks, you have an income, you have maximums that you have to do. IRAs have maximums, either income or maximum contributions. So if you're 40 something or 50 something and you need to dump in a whole bunch of cash because you want to retire at 65 and you haven't done anything, starting, you want to be able to put in $100,000 a year into something. Well, an annuity allows you to do that without penalty, and you're not paying taxes on it until you start getting contributions. So it has tax strategies. I recommend that you connect with a licensed life insurance or investment advisors to learn the details. I just want people to understand that there's strategies behind it. Don't focus on the product. Focus on the strategy. So I may not want a lifetime stream of income. I may want an income for at least 20 years. So that's a term period. I may want my income immediately. I'm 65. I have this 401k that's $200,000. I want to purchase a $200,000 annuity, but I want it to start immediately. That's called an immediate, right now annuity. I could be 40 something and say I have $100,000 in my 401k. I'm still going to contribute, but I want to guarantee my income for the rest of my life. So I'm going to put $100,000 in a deferred annuity, a future annuity. So when I want to take it out, I'm earning interest, I'm building it up. So when I decide to take it out at 65, at least it's deferred until then, and taxes are deferred.
Wow. So that's a great thing. So that's a great way to, like you said, complement a portfolio to say, depending on it's not the only investment instrument you can use. It's one of the ones you can use. And that's a key thing you said about, being a licensed life insurance agent, to make you go out and find one, to make sure you're doing the right, product that could be aligned for you.
Absolutely.
Because it's all about what's suitable for who and what and stuff like that.
It's all about the strategy. So I don't recommend anyone that pushes products. I recommend those of us that talk about strategy. What is your end final destination that you want to do? Where are you now? And create a plan to get there. An annuity may fit into that plan. Investments may fit into that plan. Life insurance may fit into that plan. But whatever the strategy is, that's when you do. But I tell people, don't discount an annuity, because that's how lots of wealthy people get to do the things they want to do, because they have money coming from different annuities in different areas.
Like you say, I did an internship at a wealth management firm, and a lot of products that was there, a lot of them was doing different type of annuities for their grandchildren and stuff like that. The cash flow, they wasn't really concerned with having, I have this lump sum of money, but due to inflation, it could eat it alive. What are some ways I can create cash flow to, for my kids and stuff like that, so they can't mess up the money? Because if you have a lump sum of money, somebody could spend all of it.
Absolutely.
Versus, having a straight cash flow come in. So that's a way that could be, something to be built generational wealth.
Exactly. So I'm going to give you an example of how one of my clients uses an annuity, not only for a lifetime stream of income, but also as life insurance. Okay. So one of my clients, she has cancer, breast cancer, or had breast cancer in remission, but she doesn't qualify for life insurance.
Wow.
Okay. So she can't get life insurance, but she wants to leave some money to her family. She doesn't necessarily want to leave it in cash or whatever, because she needs to live. She's in remission. She's about to retire, and she wants to live and have fun. Okay, so what we did is we created an annuity for her. We purchased an annuity. She's going to have a lifetime stream of income, but what we did was we created a period certain. A period certain means that we guarantee you that we're going to pay you this income for at least 5, 10, 20 years. So her life expectancy may not be 20 years, but she wants to be able to have that income. And if she passes away within 15, at least 5 years of that income will then go to the beneficiary, which then acts as life insurance for her. So that's what I mean by strategy. So when you have large sums of money, you may have a 401k that has $500,000, but you want to do something with $100,000 of it to guarantee or to ensure, that's all insurance is to ensure that you're going to have an income stream. You an annuity may be a good option. But again, there are pros and cons. Make sure you talk to the right professional that can help you through it, or contact me at prosperitynow@fms.com. So.
Okay, okay. Thank you very much, Ms. Tarra Jackson. How can they get in contact with you?
You can either go to madammoney.com, that's MADAMMONEY, prosperitynow.fms.com, or you can hit me up on all social media. They love to call me Madam Money. So I'm at MS Madam Money, Ms. Madam Money.
Miss Madam Money, I want to thank you for coming on to the show and bringing that advice and bringing that education to the YouTube audience around the world.
My pleasure.
So, thank you for that.
And thank y'all. This is fun.
Thank you. As always, guys, don't forget to like, subscribe, comment, and share all of the good stuff. And until next video, you guys already know what to do. Peace. Be safe. I'm out.